Could you use the funds in a SSAS to pay off the commercial mortgage in your company? Yes, absolutely, of course. You can arrange to do this. Why don't we take you through the structure of how this works? So SSAS, Small Self-Administered Scheme, is set up by a limited company and usually by the directors of that limited company. So I often find when talking to directors about this, it's easier to actually draw it out. As always, a picture paints 1,000 words. So here we have your limited company, and we'll assume there are 2 directors. And the limited company will sponsor and set up a SSAS for you. Let's say we put the 2 directors in. Let's pretend they're a husband and wife team. Obviously, what the SSAS can do once it's actually established is it can apply for transfers from existing pension schemes. So if you have, say, SIP, personal pension plans, and nest type arrangements, then you can arrange to have these transferred into your pension scheme. So we'll give you a value. So let's assume for the purposes of this illustration that those transfers add up to, say, £50,000 each. So we've now got £100,000 in the pension scheme. If we then look at the position of the company owns and has on the balance sheet a commercial property. And let's say that that commercial property is worth £300,000 and has a mortgage of, let's say, £90,000 on it. For this illustration. Company may not be able to make any contributions, possibly, so we could just do a straight part purchase of the commercial property off the company. So what we do, we get the property surveyed by a chartered surveyor who will give us a valuation, hopefully 300,000. But when they're doing that survey, they will also give us a rental assessment of the property as well. Because clearly, if the commercial property is in your company, you don't pay rent to yourself. So it's perfectly possible for the SSAS to buy a proportion of the commercial property. So we don't have to hold all of the commercial property. This is worth knowing. So in this particular example, we've got £100,000 in the pension fund. We agree to buy, let's say, £100,000 of the property. We will convey the part of the property, so we'll own 1/3 of the commercial property inside the pension scheme, with 2/3 still being owned by the limited company. So clearly cash has had to flow in this direction, and obviously you have a solicitor who will arrange the part conveyance, and clearly those funds will pass up. 90,000 will flow through the solicitor account, and they will settle the outstanding debt to the bank, and obviously any surplus will be returned to the limited company. That is the way you get rid of your commercial debt. You are effectively debt swapping. You are swapping the debt for an asset, for an investment in the pension scheme, which has got to be good. So what happens now? The limited company actually has to pay 1/3 of the rental assessment. So let us assume, for the sake of easy maths, that they said the rental assessment was £60,000. Then clearly the company would then need to pay rent to the SSAS of £20,000 per annum. And don't forget that rent is tax deductible in the company, so that saves corporation tax at whatever rate you're paying, and the £20,000 comes into the SSAS totally tax-free. So you actually now have 1/3 value, so you have £100,000 worth of property value, and you're adding £20,000 a year as a rental payment from your company. If we roll this forward a little bit, what could happen in future years is the company could decide to make corporate contributions to the SSAS for the directors. So again, let us say it adds a further £50,000 as a contribution for each director. Sorry, this gets a little bit busy. And the pension scheme could then agree to buy another third value of the company, of the property. Again, the same transaction happens. We buy a third, and those funds flow back to the company. If you're really smart, when the money comes back, you could use exactly the same money to make yet another contribution for the directors. So you can actually spin the same money round 2 or even 3 times to purchase the property if it's held in your company. So we've got rid of the mortgage debt on the first transaction, then on the second and possibly third transactions, we can buy the remainder of the property using the same £100,000. And don't forget, it always ends up back in the company because we're buying the asset from the company. So this is a fantastic way of moving the property out of the company. Obviously, the rent goes up, so the rent is now increasing. So you've got increasing cash flow coming into your pension scheme. And clearly these contributions, as I'm sure you've worked out, if we put £100,000 into the SSAS, these 2 contributions, each time we do that, that is going to save you typically £25,000 in corporation tax. So this is a great way of obtaining tax relief on an asset you already own. How clever is that? We'd love to hear from you. If you have a commercial mortgage in your company, how are you going to repay your debt early? We'd love to hear from you. Please leave a comment below.
Book a call with us via the link in the description below. If on a mobile device, simply hit the More button under the video title and pick a convenient time to speak. Feel free to share this video with others that may benefit on WhatsApp or in other online groups or channels. Like, subscribe and hit the notification bell for lots more SSAS related content, and leave a comment if you found this video helpful. For more, visit onecrownpensions.com.